The following is a presentation of TFNN. Now, TFNN opens the door to the future. Larry Pesavento, systems analyst, is your tour guide into the market futures. Want to see into the future? Well, climb aboard Larry's time machine and come with us. Larry takes your phone calls now, toll free at 1-877-927-6648. This is the Futures Hour. Here's your host, Larry Pesavento.
Okay, good afternoon, folks. And I was just watching a religious program on Bloomberg and CNBC. They had the second coming of Jesus on, Mr. Bernanke. And it was very interesting to listen to his comments. And someone was kind enough to send me some information about what he had said back in July of 2007. If you want to have some fun, just go in and Google it, and it shows what he was talking about in July of 2007. As you recall, the market bottomed on August the 15th of 2007, and then went up and made new highs, much like we're doing right now. And on that August 15th date, it was the only time that Skype was ever out of commission. I was always been a big promoter of Skype, and I certainly used it a lot. And Tom O'Brien and I used it quite a bit. And that was the day that Skype was out. And it was an unusual day that day because the Dow Jones was down 470 points, almost 500 points. And the Russell 2000 was actually up on the day. And the NASDAQ was only down about 4 or 5 points. And at the end of the day, of course, the market rallied back to only be down about 50 or 60, and that led to new highs into October. But they give a talk for the Fed in July of each year in October, and in October of 2007, if you go into Google and look at his comments, then all roads paved to Camelot. There was no warning of any kind. Everything looked okay. The mortgage problem was pretty much non-existent. And then that's what happened. So even though he's the head of the Federal Reserve, that doesn't necessarily mean he's going to get everything right. And I'm certainly not in any position to challenge anybody. I'm just saying that, you must watch, what's happened in the past. We're having the same pattern occurring now. Like we had in 2007, we're making higher highs in the Dow Jones, higher highs in the S&P, higher highs in the NASDAQ, and higher highs in the Russell. The New York Stock Exchange Index has not made a higher high yet. It's still about 3 points away. That's my barometer that I use. But frankly, it's just a matter of a few days away before I think we're getting ready, to finally roll over, and we'll see if that's going to be the case. But we do have a full moon coming in on Monday the 22nd, Monday the 22nd, so we'll be able to, see how that's going to work. Now, this is the commodity show, so I want to spend most of the time, in fact, all of the time, working on the commodities, and I think that's a good thing to look at. I did want to put the chart for the New York Stock Exchange Index into Tiger TV to show you that this is the largest of all the stocks that we look at, stock indices that we look at, and it is by far the best as far as telling us where, the markets are going, and that's, the ideal situation of, what we're trying to follow. Now, the Dow Jones Transportations have also made a new high. The utilities are right about a 50% retracement of the previous high. So there's a little bit divergence there, but frankly, people just, I guess I'm wrong. Well, I've been wrong. I mean, I haven't been short here. I mean, I really haven't put a major short position on. I've nibbled at it a few times, but I've been trading gold and crude oil and the currencies and treasury bonds. So those are the ones that have been, paying the bills because I see the market has no volatility here in the S&P, so that means there's very little selling, and it just ratchets higher. That's really all all it's been doing. So that's the main reason why we're waiting to see what's going to happen on this next full moon, and then we will have a pretty good idea if that's going to mean something or not. Now, on yesterday's show, we focused on the Treasury bonds because they were making a perfect, symmetrical pattern that was just, you could write a textbook about this, and that is, the first correction was at 382. That was back on July the 9th. The second correction was at the 61% retracement on July 12th, and then we had the one on the 17th yesterday, which was at the 786. Each of those were 5 days apart, and now we are, starting a major correction to the downside. We're well over $1,000 lower in the Treasury bonds, looking like we're going down to that 133 level. That's what it appears at this point. The main I'm going to show you this pattern here in the Treasury bonds because I want to tell you a little story because it relates to what's going on in my life right now. And this was going back to 1990. Bryce Gilmore, the gentleman who wrote the Geometry of Markets, books 1, 2, and 3, probably one of the smartest technicians I've ever met, and I'd have to say that without too much thinking. But he is certainly one smart dude, and he taught me a great deal. Once we were trading in Pismo Beach, and we were in Treasury bonds, and he wanted to sell Treasury bonds at, I believe the price was 101.02, and he wanted to put a stop at 101.03. And I said, that's one tick, that's 31.25. I said, you can't trade bonds that way. And he said, look, if they hit 101.03, he said, I'm going to take all these books that I've been learning through for the past 15 years, and I'm going to go out to that pier at the Pacific Ocean, and I'm going to throw those books into the Pacific Ocean and go back to selling exotic sports cars in Australia. And I laughed about it, and he was not kidding. He went out to play golf, and we got filled at our price, 101.02. I put the stops at 102.08 because I didn't want to risk, one tick. That was, to me, suicide. They never did hit 102.03. And before he even got to his car, they had started to break, and he drove away, and the market had broken about a half a point by the time he got to his car. So he said, let's take the profits in the bonds. And I said, are you sure? If this is a big spot, it might go down more. And he said, no, that's good. He said, I made $2,000. And so he took his $2,000 profit, and bonds proceeded to drop almost 3 full points that day, which was $3,000. So I'm at the point where I've looked at all of these long-term charts all across the globe. I'm talking about everything in Europe. I've looked at Southeast Asia. I've looked at Japan. I've looked at Hong Kong. I've looked at China, all across the the South America. Folks, I look at the price of copper. Folks, this cannot be a new bull market breakout to the upside. It's just not going to do it. And if it is, it's time for this old cowboy to go to that same old pier in Pismo Beach with his books, put them in a little canoe, and just shift them off into the sunset. And that's probably what I'm going to do, because Monday's the day. We've got a big full moon coming up, and if the market doesn't turn down next week, I think I'm going to load up the old truck and head out to the Pacific Ocean and let the books go, because that means all of this technical analysis that I've been doing is going to be really, really skeptical here. So we're right at the spot. I have a really greatest respect in the world for Basil Chapman. I think he's probably one of the best people I've ever heard, and I listen to his guidance that he gives you, and it's by far better than anything that you're going to find on the internet or just about any other place. And I listen to it every day. I don't get to listen to everybody else. I don't get to listen to Tom or Steve Rhodes or Andy or anybody else, but I do get to listen to Basil because he's on right before me, and I listen to the advice that he gives you, and it is it is very, very incredible. I am trying to position myself for something that is really. Somebody sent me a private message, said they'd like to buy the books before they get wet. I don't think I'd be that extreme because my library is worth a lot of money. I've accumulated over a lot of years, but I'm just telling you that that's what I'm doing. I love short-term trading, looking at 30 and 60-minute charts, and I'm really good at it. And I can do 5-minute too, but that's a little too intense, and I don't watch the machine that often. But when I see something really major happening, like what we had in 2007 and what we had in 2009, these are things that I think are just really, really big. In May, we had the Sell in May and Go Away program, and that worked for well over 4 weeks. It went straight down from May 24th into the full moon of June 23rd, and then the market has gone straight up again, and that's what happened in October of 2000 in 2007. So I think we're very, very close here. We're going to have a pretty good indication here come next week. If we're down sharply next week, and that could be down, the Dow might be down, maybe 5 or even 10 points on one day, if that's possible. That might trigger, a pretty good sell signal. Let's get to the commodities. We've done the bonds. The bonds should have some pretty good support down about another 2 points. We know that the long-term weekly chart on the bonds has, hit the 61% retracement exactly, and we have, looked at that several times. We're in the second week of the rally here. It just completed that first ABCD correction, and so that's telling us that, the bond market has pretty much, done the first part of the rally. That doesn't mean the rally can be over, but it just means that we should have some more correction here down to the probably 133 level, down about another point and a half. That would be a 61% retracement coming off of the next move. Now, I think that we need to take a look at the crude oil, because we've been watching that for a considerable length of time here, and we're going to look at it on a long-term basis, because we have some tremendous divergence happening now in crude oil, and that is the fact that we've had lower highs now since 2011. Our high was at 112 in 2012. The high was at 111, and so far in 2013 we hit the 108 level today, completing several ABCD patterns, coming at the same time. So that's telling us that that we've been up for it's been up for 8 weeks now in crude oil. So the market is certainly overbought on an outlier event, and we would have a pretty good idea of what's going to happen, because when crude oil, I'm sure you folks know this, but when crude oil is broken down, into the products that it uses, one of the things, the main thing, and of course we use this, all the time, everyone does, and that is the natural gas, and not natural gas, gasoline futures, and the gasoline futures have made that that extremely bearish pattern that we talked about here, that is going on in the stock market. That's that 1, 2, 3, 4, 5 expanding triangle, and that happened in March. The market then broke well over 40% in gasoline prices. We've rallied back to the 786 retracement now. Off of that level, and it looks like, and remember, while it's doing that, crude oil has gone the equivalent of $3.80 per gallon. In other words, if they were running together, but they're not running together, and that's the big problem. Okay, we got to take a little break here. We come back, we'll talk a little bit about heating oil, and then move to the grains.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. You've always taken the long view when it comes to investing, but what if there's an opportunity right under your nose? What if you could be more responsive to market trends to seek to boost your portfolio performance right now while seeking to reduce your overall risk? At Direction Funds, we connect investors with alternative strategies that seek to maximize their returns. Smart investors deserve smart alternatives. Find yours at directionfunds.com. An investor should consider the investment objectives, risk charges, and expenses of Direction Funds carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Funds. To obtain a prospectus or summary prospectus, please contact the Direction Funds at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. Investing in index funds may be more volatile than investing in broadly diversified funds. Distributed by Rafferty Capital Markets, LLC. McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX. With over 3 decades of commodity trading experience, Andy Hecht has developed a system that combines both technicals and fundamentals. He calls this approach Technomental, and now you can put it to work for yourself with his brand new service, the Technomental Commodity Report. In this weekly newsletter, which comes out each Thursday morning, Andy gives you his analysis of the market price direction bias using fundamentals, and then specific trade recommendations including entry and exit points using technicals. The recommendations in the newsletter are always based on stocks and ETFs, so a futures account is not required, and Andy will often use options in the recommendations as well. Andy will tell you where to get in, where to get out, and he'll outline the risk-reward profile for all recommendations. To get your month-long free trial to the Technomental Commodity Report by Andy Hecht while locking in the low introductory rate, visit the front page of TFNN.com today.
Larry takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, back to the Futures Hour.
Okay, folks, we're back, and we were talking about the price of crude oil, making these weekly highs, and we having so much divergence between the gasoline futures and then also the heating oil futures. Heating oil have just barely made the 61% retracement off the last month's high, so they're falling behind quite a bit. The next one I wanted to cover here, we've got a little bit of time here before the next break, is and this is where I might be missing the whole. Well, I might be missing the whole bull period, but this is where the real pedal to the metal happens. Is we've had a bear market in copper now for well over 2.5 years. Now maybe what's going to happen is everybody's going to need product here because they're going to realize that the economy's in great shape and the housing bubble has been fixed and all the problems with the banks have been fixed and everything is back to normal and we're back to a 4% GDP. And interest rates are not going to go higher, things like that. So we'll see. But why isn't copper going up? I mean, this is the biggest divergence we've ever had in the history of the stock market versus copper. Copper is one of the best economists for the stock market, is because copper is used in so much stuff, and yet it's not going up. I can understand the Dry Baltic Index laying flat. That's probably due to the fact that Chinese have built so many boats, and there's so many of them just floating around the seas just totally empty because there's just too much capacity. That I can understand, but I can't understand the non-use of copper. I mean, it's been in a trading range between $3.05 and $3.40, for the past 4.5 months, and it's traded at the low end of those ranges because we made a lower low just a few weeks ago. So, there's something's not right here. I'm just, saying maybe there's something happening here that's under the radar that we're not seeing. I don't know. All I can tell you is that the long-term patterns, and I'm talking about the weeklies and I'm talking about the monthlies, on these stock indices are really they're really, really bad. I'm going to stick to commodities, though. I know I'm getting I feel like the lady in the Bible that gets stoned, and but that's it. You're supposed to throw stones at me when I'm wrong, and I have. But I haven't been issuing shorts, on the way up. I'm just saying that we're coming into a top area. I tried it in May. It worked really good. And then when we had the full moon down there on the 24th, that was a no-brainer because you had a perfect 61% retracement, and on everything. That was, the Dow, the S&P, everything had a 61% retracement on the 24th. What surprised me is that it went from the 24th of June to the, into this 22nd of July straight up. We haven't had a down day, but we've had one down day, I believe, in the NASDAQ all during that time, and I don't think we had any in the Russell 2000, and that's making a very large AB equals CD at that point. Okay, now I wanted to switch over. We got a few minutes here, and we covered the copper. I wanted to go into corn because we've been watching corn for quite some time, and we've tried it on the long side several times, and it's worked pretty well. However, we have now in corn, looking at December corn, and that's the one that's being traded now, folks, because that's the corn that has been planted and hasn't been harvested until October, November. But we have now come down below the 786 retracement, and that was not a very good sign. We had two really great trades in the last few weeks. One was well over $1,500, and the other one was well over $700. But the one we did yesterday, we bought the December corn at the 503 level, and then last night it got relatively weak, and so we took a 7-cent loss in that of around $350, and now we're standing aside because there's a chance that we could get all the way down to the $4.84 a bushel, which is not a very low price for corn. When I started trading corn, it was trading for $1.10 to $1.05, and the weekly range would be about 5 cents. This was back in the 60s, 1960s, not 1860s, but it was very, very quietly traded, and now we're much, we're at a much different price level on that than at any other time than we've had in our history. Wheat is still holding up relatively well. It has coming down to some serious support here. Take a little break here, folks.
With the stock market flirting with all-time highs and volatility back, now is the perfect time for a 2-week free trial to Market Insights. On Monday, June 24th, Tom O'Brien closed out all 5 open positions in his daily newsletter, Market Insights, with all trades being profitable and ranging from a 2.23% gain all the way to more than an 11% gain in just one position for an incredible 32.7% profit combined between the 5 trades. Let Tom O'Brien's years of market experience work for you. If you'd like to see for yourself what kind of trading newsletter Tom O'Brien delivers to his clients each morning, then now is a perfect time to sign up for a 2-week free trial to his daily newsletter, Market Insights. In a volatile market like we currently have, the potential for fast market moves like we've seen recently is a trader's dream. So don't wait any longer. Sign up for your 2-week free trial to Market Insights today at the front page of TFNN.com. In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN. No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors. This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, folks, we're back, and I was going to bring one other thing up, and since we were talking about, Bernanke coming on and talking about things, I'll have to tell you a story. I worked for a hedge fund during the mid-2000 level, and it was a very, very nice group of folks. And what happened is that one of the nephews of the owners of the hedge fund became interested in finance, and so they gave him a job. He was 26 years old. He had just come out of Amherst MBA program, and so he was in charge of the 4 traders. I had 50 years experience. 2 other guys had a total of about 30 years experience, and then the other fellow was of the 4th one had about 10 years experience. So it was about 100 years experience. He had none. And what was happening at this time, this was in July of 2007, and Blackstone was coming out with their IPO. And it was this biggest hype IPO that we had up until we had Google was before that, but then Blackstone was the biggest one, and this was the biggest one before Google, before Facebook, and Facebook was the biggest one. And we had a meeting about this, and I was trying to make the case for, look, why is it after all these years, and Blackstone is by far the most successful hedge fund at all, I said, why is it after all these years they're finally going to let the public in? Tell me why. Why are they doing that? I kept saying that, and no one would believe me. And so I didn't have any votes. I was just giving my, and I was very bearish in the market at that time. And I said that in itself, I said, well, if you're going to buy this stuff, why don't you wait just a few days just to see, that it's going to go up. It's better to buy it if it's going up than it is if it's going down. I mean, Basil teaches that, all the time. Well, I'm going to put the chart into Tiger TV for the Blackstone, and it shows the relationship between Blackstone and what happened to Facebook. I mean, it was just really amazing. Blackstone came out at a price of 38.5, and it dropped the first day about 5%, and went from 38.5 down to 4 over the next 18 months. It's since rallied back to about 22 or 23. I think that's where it's trading now after all that time. So just because someone comes on TV, do the work yourself, man. Defy human nature. Go in there and look at the charts and say, why is something doing this? Look at maybe what's behind the scenes from what people are telling it. We know that the Fed has got a lot of money and they throw things at it. But, you go back and look at their history of what they talk about, what's happening with the economy, and what really happens with it is that's not always the case. They're very poor at, economic reporting and that stuff. Just go back and look at previous times, that occurred. I don't think anybody's done it right except Volcker, and that was going back into the 80s. But that's my opinion. Who knows? Okay. Anyway, you can see the relationship between hold on a second. Between oh darn it, I just lost a chart. Between the Blackstone and what happened to Facebook, I mean, they've just been almost identical as far as breaking and then never getting back to the level that they were looking at. So that's the main thing that I wanted to focus on there, is just be careful, because people, what they talk about is not necessarily the case. They have a hidden agenda. We've shown the charts on Warren Buffett many times of how he uses the market. The same thing with George Soros and other people like that. So the next one we want to cover here is we want to get back to the grain markets. Wheat futures have been coming down along with corn. I think we've got about another 40 or 50 cents to go, a little lower in the wheat, and we might have a pretty good buying opportunity in that area. But we're not going to have the giant bull market that we had in last June, because the market has stalled here. Now we could have one or two crop scares through here, but it's certainly going to be an interesting move here, where hopefully they'll get down to a level that's relatively cheap to buy, and we'll be able to look at it. Remember when the wheat was at the high, we were looking at markets that were making 1.618 expansions, and nobody wanted to sell them short. But when they're way, way low, nobody wants to buy them. So that's the key, is to try to come in and buy things when they're on the way down, so that you can get a relatively cheap price and you don't have to risk very much. That's the reason that I'm looking at it when I try to trade, is to get the risk so that it's very, very manageable. I wanted to switch to soybeans now, and we're going to take a look at new crop soybeans. Those are the Novembers. They're still acting extremely bullish. They're still around $12.60. They've been in a very strong uptrend for quite some time. And to me, if you have to look to buy any of the grains, the best one to buy would be look to buy the November soybeans. So that's what I would be watching. Now, I'm having a slight technical problem somehow. I don't know what the problem is, but I'm not able to put charts into Tiger TV. We'll see if we can get this fixed here and get the charts to you folks. And if not, then I just won't post any more charts. I will just Oh, they're starting to work again now. All right, that's great. So we've covered the corn. We think corn's got another 20 cents to the downside. We think that wheat's got another 40 cents to the downside. The price of cattle have been sideways for quite some time. And so that's the main thing about the commodities that we see. We've covered the crude oil. I think we're at a major top here in the crude oil at this 108 per barrel. If we get above 109, then I would say that this pattern is failing. But right now it looks pretty good. The spread between West Texas crude and the Brent North Sea has gone from $25 a barrel down. I believe it's now down to $3 a barrel. That was supposed to be the big premium oil, was Brent North Sea crude, and now that's not the case anymore. And here again, they tried to give you a story about something that was really not there. And if you just looked at the charts, you'd certainly be able to tell you where you are amongst these things that we're watching. So I wanted to bring out the dollar index one more time. I'll save that for last. I wanted to bring out the dollar index here because we are at such a critical level here. If you'll give me a second. Yeah, this will take just a second here, and then I think we've got the dollar index coming up into Tiger TV. It shows the dollar index futures. And it shows the 1, 2, 3, 5 expanding triangle like we've had in some of these other things that we've been showing. It's one of the not one of the most. It is the most highly predictive of any of the patterns that we deal with, especially when it makes a new high like we're making now in the stock indices and stuff like that. So we are at a very, very critical support that we hit in the U.S. dollar index just the other day at the 82 and change level. We rallied a little bit from that level. That makes a head and shoulders pattern with the U.S. dollar index. And the reason why that's important, folks, is because the all these commodities that we deal with are based on paying money for them, and that's the real key to what we've been watching. As you recall, when we were on the show yesterday, we focused on the gold market. And we want to take a look at the gold and silver again because we have the same thing, occurring with these markets. And we'll do silver first because we can show the relationship between the two of them using a 60-minute chart. And you'll see that we've had a really nice break in silver. It stopped right at the 786 retracement. It's been a lot weaker than the gold. And the gold market is the one that we trade all the time. I trade gold almost every day, and we're looking to gold to sell off maybe into the I'm sorry for laughing, folks, but I am having technical difficulties. But computers just don't like me very much. That's the bottom line. The thing that we wanted to watch here is the gold market because I think we've got a chance for gold to pull down into the 1242 level, which will be the 61% retracement of this last move that occurred. And I want to bring this up because we covered this on the show yesterday because the fact that the gold hit that perfect ABCD pattern that we were watching. And I'll blow it up here so we can all see it really closely here. And then we can let everybody on Tiger TV see it. Let me clear it out, change it, and then we'll just we'll draw in the ABCD pattern, and we will show what we think the next move is going to be. If it's equal to the last one, and this is, I think, you're going to be your last chance to get on gold if it does what we think it's going to do, and that is to buy the gold. If we get this 61% retracement down here to this 1245 level, that's where the area would be where I'd want to be watching gold. The long-term chart that we've had in gold, you remember the 618 came in at that 1170 area, and so if we can get the gold to come down one more time, and it's only $40, so $40 in gold, moved $30 yesterday, so $40 in gold would not be too hard, and you'd be able to buy the gold at that spot, not risk more than $10 if in fact that's going to be the case. We'll have to wait and see. Well, anyway, we'll just see what's going on here. When I talk about these being skeptical about people, folks, I've been involved in this business for my entire life. I started it when I was 18, and I've heard everything. I've listened to everything. Years ago, I used to take those things as gospel, and after a while, you realize that these people have hidden agendas, and if you don't think that the Federal Reserve trades for their own account, you're being very, very naive. So just remember that also, that during these wild times, they have inside information, and they're not a government organization. They don't have to report to anybody. So that's a huge advantage of what you're watching. But on the long-term basis here, and I think it's very important to watch this, because we were very bearish on gold on the way down, especially when it broke the 1565 level, and we'll post the long-term weekly in there and show you that retracement that we made was the low that we came off of in 2008 in October during the financial crisis. We got down to the 663 per ounce. Now then we went up and made new highs at 1932, and now we've made a 61% retracement of that. And on the long-term weekly chart, folks, this is one of the first ABCD corrections that we've had in the last 10 or 15 years. So this is not on a long-term. If you're trading long-term weekly charts, this is not a bearish chart on gold, because you're still in a massive uptrend, and you made a beautiful ABCD correction right at the 61% retracement. So the next, the next pullback in gold is the one that might be the one that gives you the last chance, to catch the train. And if we get below that 1170, the train's going, it's heading towards Nicaragua. Gold's going to go well below $1,000 an ounce, because the next support is at $975 an ounce. I had a request here from someone to, talk about the price of Apple. We posted that the other day, that there was strong resistance in Apple at $432 a share. I think we hit that today, maybe gone a little bit higher, but it's been in a downtrend for a very long time. It hasn't rallied off of the big bottom that we thought was happening at $390. We were able to rally $80 a share, but it really hasn't gone very much. But if you folks have a chance, take a look at your charts of Microsoft and Starbucks and Tesla and a few of these other stocks that are making these reverse point wave patterns. It's really very ominous. I haven't seen it like this in my total career, but I've only been doing this for a few decades, 5 or 6 decades. So whether that's going to make any difference in the long run, we don't know, but we shall see. I would like to mention one other thing about the commodity markets, and that is, someone asked me a question about the price of sugar. And I don't trade sugar very often, but I'm going to give you a quick little view of sugar, because it's been going down for a long time, and it's still making lower lows as we go. As you can see, I'm going to put the long-term daily chart in here. We made a big ABCD pattern back in October of last year, which was a sale up at $21 a pound in sugar, and now we're coming down, and we're back at the $16 per pound level. And when I started trading sugar, it was around $6 a pound. That was going back in the 60s, and now we're at this level. There's an expanding 1.618 level coming in around $15, but frankly, there's so many things that are more fun to trade than sugar, I wouldn't even get involved with it. I don't trade sugar, Coke, and coffee very often.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Victor Jones, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen, live during those shows, and have access to all those charts. You can test drive the Tiger's Den, absolutely free, for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's Patterns, Profits, and Peace of Mind.
And get the edge you've been looking for.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com. Now, back to the Futures Hour.
Okay, we're back, folks. And we have the lucky winner of the 100-ounce gold bar. Mike from Florida, are you there?
Hey, Larry.
How are you? What can I do for you, my friend?
Good. I'll take that gold bar.
Okay, it's going to be delivered by U.S. mail, but it's uninsured, so I'm not sure when it's going to get there.
Okay. I just wanted to mention something to you. I really enjoy your show because I do trade futures, and I always get an education every time. But I had a buddy that asked me to come over and take a look at. He trades the stocks with that Schwab of all places, and I was with him there last night, and we were talking about the various markets, and even just shorting, what have you. And he goes, "Well, I can't." And I was talking about the Russell in particular. And he goes, "Why can't?" And he's been there 5 years. He goes, "I can't short the Russell." I said, you can't short the Russell. So what are you talking about? And then he shows me on his platform that Schwab, and he's had this now for 5 years, they have the Russell on the tough to borrow list. And so I said, come on. I said, call them. And so we called them. And they will not allow them or any of their customers to short the Russell. And
they're doing him a favor.
I know. That's true. That is so true. I know, but I just wondered, I'm like, I wonder if the rest of the retail brokers or, brokers, I wonder if that's part of the bubble. It's just a one-directional thing. I don't know.
Well, Russell is an index, as I recall. I think the IWM is actually the ETF for it, but I have never traded the Russell, so I don't really know the answer to that question, and I don't trade ETFs.
Well, you've never traded the TF, though, in the futures market?
No, never.
Really? Why, no. Larry? I'm curious.
Well, because I do better with the NASDAQ and the S&P. I don't even trade the Dow futures. The only time I've ever traded the Dow futures was during the big drop into 2008. I would sell anything that rallied just a little bit because we had very few rallies, and I was selling everything into that down move all during July and August and September of 2008. So I did some Dow there, but I never did the Russell. I did some NASDAQ and a lot of S&P, but never the Russell small cap. I mean, that's why they call them small caps. Their capitalization under 20 million or something. So it's not a real indicator of what's happening with the stock market anyway.
Yeah, I don't trade the YM. I do trade the EES. I've never had much luck with the NQ, but the TF, I love trading the TF. I'm shocked that you don't trade that.
I could probably shock you about a whole lot of things, Mike, but we can't go into those at this time on this program.
I look forward to the gold bar. Larry, thanks for all you do.
It's thanks for the kind words, and I certainly hope that it gets there the way it should. But you know how these things happen in Florida with all the crime you have. It could be stolen. Just keep reminding me, and I'll see if I can get it in the mail to you. And by the way, when you open it up, it's quite delicious. It's dark milk chocolate, so you'll be able to really enjoy that too after you finish with the gold wrapping.
There you go.
Thanks for calling in, Mike. I certainly appreciate it.
Bye-bye.
Okay. I don't know. Back in the old days, when I was at Drexel, I did do some shorting in stocks, and part of the problem when you short a stock is it has to be borrowable. In other words, your firm that you deal with has to have the stock in its inventory. If you deal with a small stock firm, they might not have it. Somebody like Interactive Brokers and Goldman Sachs and J.P. Morgan, places like that, they're going to have their stock in their inventory, but they might not do it. Live every day in an attitude of gratitude, and may God bless.
Nowhere, spelled N-O-W-H-E-R-E. At one point, we've all been there, whether it be our health, career, or our finances. Some might be there right now. So where are you when it comes to your trading and investing? Better yet, where would you like to be? The good news, I can take you from nowhere to now here right now. Same letters, N-O-W-H-E-R-E, just a totally different emphasis and focus. Hi, I'm Steve Rhodes with TFNN, and on July 25th at 6:30 p.m., I'm going to share with you a trading strategy that I began on May 10th when the S&P was at 1627 and closed at the same price 8 weeks later. That's right, the S&P went nowhere versus a trading strategy that produced a 100% hypothetical return in that same period of time, and it's now here for you. Subscribers to my daily newsletter service, Mastering Probability, have free access to this exciting live workshop. The trend is your friend. All the details are on the homepage of TFNN.com. Decisions shape your destiny, and your trading destiny is now here for you.